Hi everyone and welcome back to my channel, The Money Blueprint. I'm your host Michael and today we're going to explore how to spot the early signs of a bull run in simple terms. Whether you trade stocks or cryptocurrencies, knowing these early clues can help you better prepare and make smarter decisions. Over the course of this video, we'll break down the signals that often hint at an emerging bull market and look at some recent examples that illustrate these trends. So let's get right to it. First, let's quickly revisit what a bull run is. A bull run is a period when asset prices rise steadily over time, driven by optimism and increasing buying pressure. It's like the market suddenly catching a strong, positive wind that pushes prices upward. Spotting early signs is important because it allows you to get ahead of the trend, either to manage risk if you're already invested or to potentially join in when the uptrend begins. Think of these signals as the market's way of saying, hey, something good might be coming. It might be. One of the first signals you might notice is a sustained recovery in prices after a period of stagnation or minor declines. In simple terms, if you see an asset that has been trading on the sidelines start to consistently bounce higher day after day, even if the gains are small, it's a sign that buyers are beginning to step in. For example, if Bitcoin or a major stock index shows repeated lower low tests, followed by higher closes, that steady recovery can be an early hint that a bull run is forming. Technical tools like looking at simple moving averages can help you see this trend more clearly without getting too complex. Another key indicator is rising trading volume. When more people start buying an asset, you'll see a noticeable increase in the amount of trading. Even before prices surge dramatically, a spike in volume signals that more money is entering the market. So, think of volume as the number of people talking about an event. The more people that join the conversation, the more likely the event is to gain momentum. For instance, in mid-2024, many analysts noticed that volume on major cryptocurrency exchanges began to rise as prices started to consolidate near key support levels. This increase in volume often precedes larger upward moves, acting as a kind of early cheer from the market. The fourth sign to watch for is when simple technical indicators start pointing in the upwards direction. Think of them as traffic lights for your portfolio. When they turn green, they suggest the path ahead might be an uptrend. Two of the easiest tools for beginners are moving averages and the famous golden cross, and also the relative strength index, or RSI. Let's start with the moving averages and the golden cross. So, what are they? Well, a moving average smooths out price noise by plotting the average closing price over a specific period, say, the last 50 days or 200 days. Why does it matter? When the 50-day line, which is short-term, crosses above the 200-day line, which is long-term, you get a golden cross. This crossover shows that recent price action has become stronger than the longer-term trend, a classic early signal that a new upward trend could be forming. And how do you spot it? Most free charting platforms like TradingView, Binance, or Coinbase Pro let you overlay these lines. Simply add the 50-day and 200-day moving averages and watch for the crossover. Alright, so next let's move on to the RSI, which stands for the Relative Strength Index. Basically, the RSI is a momentum gauge that swings between 0 and 100, measuring how fast and how far prices have moved. Now, there are some key levels you want to watch. If the RSI drops below 30, that's considered oversold, meaning prices may have fallen too far. On the other hand, if it goes above 70, that's overbought. Prices may have risen too far. So, what exactly is a bullish signal here? Well, when the RSI climbs back above 30 after a dip, it shows renewed buying interest. This kind of upward move often comes before noticeable price gains, making it another early green light for you. To put it all together, when you see both a golden cross on your moving averages and an RSI rising out of the oversold zone, you've got two independent signals pointing the same way, toward higher prices. Of course, no indicator guarantees a bull run, but combining these simple tools really helps you spot emerging uptrends before they become obvious to everyone else. Another sign for spotting a coming bull run is noticing when the big players, think investment banks, hedge funds, pension funds, or major asset managers, start quietly piling into crypto. These institutions don't buy millions overnight on a hunch. They hire teams of analysts, run detailed models, and only move in when they're confident prices will rise. So how do you recognize their activity without getting lost in jargon? Number 1, watch the headlines. Keep an eye on financial news sites like Bloomberg or CoinDesk for stories like BlackRock files for a Bitcoin ETF or Vanguard adds Ethereum to its institutional fund. Announcements like these mean these giants expect crypto to climb. Number 2, look at trading volume and price moves. When institutions buy, they often place large block trades that show up as sudden spikes in volume on major exchanges. You might see price dipping briefly as sellers fill big orders, then bouncing back strongly. Classic buy the dip behavior by smart money. Number 3, follow fund flows and filings. In traditional markets, US funds report holdings every quarter in SEC 13F filings. In crypto, watch ETF inflows or outflows, or reports from trusts like Grayscale's Bitcoin Trust. Big, steady inflows into these vehicles signal institutions accumulating positions. In mid-2024, several reports noted major hedge funds and asset managers quietly buying both tech stocks and large-cap cryptocurrencies months before the broader rally kicked off. Firms like Grayscale and MicroStrategy added tens of thousands of Bitcoin to their treasuries. That invisible buying pressure really laid the groundwork. When retail investors saw prices holding steady despite all the market noise, they jumped in, fueling the full-blown bull market that followed. So, why does it matter for you? When you spot institutional buying, it's like seeing the smart money turning on green lights. Their deep-pocketed, research-backed moves often create the initial momentum. Once prices start rising, everyday investors catch on and help push valuations even higher. By paying attention to these signs, you can position yourself closer to the front of the line, rather than scrambling to catch up once everyone else has already jumped in. To wrap up, spotting a bull run early isn't about luck. It's about paying attention to simple, reliable clues. Watch for prices that keep bouncing back steadily, see trading volumes pick up, notice when the conversation online turns from worry to excitement, look for clear chart signals like moving averages crossing, and keep an eye on big institutions quietly accumulating crypto. When you see several of these signals lighting up together, you've likely caught the very start of a new upswing. At that moment, you can decide how to join in, whether that means placing a small buy order, spreading your buys over time with dollar-cost averaging, or rebalancing your portfolio toward growth. If this video helped you feel more confident reading market moods, please hit the like button, subscribe for more no-nonsense investing guides, and drop your questions or experiences in the comments below. I'm your host Michael, and this is the Money Blueprint. Here's to making smart moves and getting in on the next bull run before it really takes off.